Welcome back. We are into the second hour of the Robert Davi Show. I am Brian Oxman sitting in for Robert, and I want to take this opportunity to talk to somebody who I think really knows what the heck's going on, particularly with what happened at the G-20 summit. It was an extraordinary event. It was a convocation. All the boys and the girls got together. They had such a good time. And David Fischer of Landmark Capital is the guy I like to turn to, who tells me what's going on in the international financial markets, really about how you can invest in gold and protect yourself from what I see as a bunch of crazies at the G20. Hey there, David. How are you doing?
I'm doing great. I'd have to agree with your sentiments. It's a lot of politics at its finest when it comes to the G20.
I mean, they're supposed to be there. They say that they're going to help fix the international monetary system. I heard little to nothing about that. What was your take on the G20?
Well, most of the time there's a lot of talk and no action, but yet they want a lot of action when it comes to them receiving money from countries like the United States. And the main meeting was supposed to be about climate change, and that definitely took its course. And some people refer, Brian, this as the G19. In other words,
19 to 1. It was 19 to 1 on the climate issue, wasn't it?
Exactly, and Trump being the one. You know, Trump is true to his colors. He doesn't believe in climate change from a traditional perspective that global warming is moving at the pace that it is, and it's being caused by fossil fuels. While the 19 countries do believe that, previous presidents, the Bush era, and even President Obama supported the G20 previously financially from $2.5 billion to up to $3 billion in this whole climate change thing. President Trump doesn't want to put a dime towards it. So that's coming against some 10,000 protesters. That's not the main reason why they're there. They don't like free markets, and they don't like capitalism, which is what President Trump stands for.
Well, the Hamburg police said they were there for the beer, but that didn't turn out to be the case, did it?
Well, maybe they drink too much beer, and that's why they can control themselves, but that's a whole other side issue on their part. But luckily, there was nobody killed this time like there was in previous G20 summit meetings previously at another country back in 2001. But the side note show was President Trump and Putin's meeting. They had a 20-minute meeting the first time there in history, face-to-face handshake through interpretation. And then they had a closed-door meeting for 2 hours. The first question President Trump asked was, did Russia influence or try to influence our elections? And obviously the answers were the same ones that were given before. No.
Oh, not me. I'm Vladimir Putin. I wouldn't do that, would I?
No, absolutely. So the bottom line is that was the main thrust of the G20, and Angela Merkel said that President Trump, she deplored the decision to withdraw from the Paris Climate Agreement, trying to influence Trump as reversing his decision and being a part of the Boys and Girls Club called the G20, but obviously he stood his ground. And those were the main topics of the G20. What it means to us financially is we'll probably have some money for our country since we're not going to support it as much as we did financially previously by other previous presidents. But President Trump made this about America's choice being number one.
How about the international financial markets, David? The price of gold and investing in gold. What do the people in the know think about the G20 conference and its aftermath?
Well, there's central bankers that really influence the market in gold. They buy gold when there's uncertainty at high levels, and then they also buy more than other times, that is. And then sometimes they're forced to buy gold literally because there's a devaluation of the dollar. So we've been in an environment recently where the dollar's been on the rise, so there hasn't been as much gold buying as there has historically. But, everything runs in a cycle. The next cycle will be the devaluation of the dollar by index, and we'll be seeing more central banks buying gold. So the G20, they don't really listen to that. They don't get involved in it. It's more political than anything.
Amazing. Where do people go to talk to you about the gold market, investing in gold, which really is probably the safest thing you can do? Where do people get in touch with you?
They can call my office and talk to my representatives by calling 855-747-5947, or they can go to my website at landmarkgold.com.
All right, there's only 10 more days left until Congress takes their summer break, and there's a huge number of financial issues that they need to take care of, which very significantly affect the markets, and including the investment in gold, healthcare bill, you got the tax bill. Well, what do you see happening before Congress takes its next break?
Well, they're taking a break at the end of this month, and it'll continue through Labor Day. So that's a fairly long period of time. And there's two other issues besides the health care and the tax bill that need to be addressed, and that's the 2018 budget and also the debt.
Oh, my.
The budget
two big
itself,
issues, aren't they?
Yeah, those are the major ones. There's some minor ones, like who's going to run the FBI and things like that. But keep in mind, Congress is supposed to submit a budget by April 15th. Here we are in July, and they weren't able to get that done, obviously, by April 15th. Last April 15th, let me clear on that. This is the House Budget Committee. So they voted for a blueprint in June. They weren't able to get that done. And again, that's last June, last month. So Congress is having some major issues getting things done. It's just escalating from the Obama era now into the Trump era. I don't think we're going to have the health care bill passed or done. Certainly we're not going to get the other items addressed, the tax bill passed. And the 2018 budget doesn't look like that's going to happen. Raising the debt ceiling, that's a whole other issue. It could shut down the government, so they might be forced to do that. But it looks like we might have enough revenue from the Treasury to last us through September. But it's kind of iffy, according to Steve Mnuchin, the Secretary of Treasury. Revenue is down from tax collections, so he's having to do what you call extraordinary measures. We can talk, more about that. I know we got to get to a break here, but that's what's the synopsis of the four things that are pressing.
It is, without a doubt, a tough situation which affects the financial markets. How is the investment in gold holding up under all of these situations?
Well, right now, because the dollar's moving up, gold is doing what it's supposed to do. It's retracing a little bit. And some people come out and say it's going to go below $1,000. We're not going to see that environment. We might see a pullback a little bit in gold, say 2, maybe 3%. I think that's an aggressive number. But I call markets how I see them, even if they're up or down, no matter what market it is. And I even talk that way about my market, obviously. So I think it's a buying opportunity getting ready to happen.
Wow. David Fischer of Landmark Capital. You can get a hold of him at 855-747-5947. Go to landmarkgold.com. It's David Fischer, 855-747-5947. He is the CEO of Landmark Capital. Stay with us. We're coming right back. Welcome back to the Robert Davi program. I'm Brian Oxman, sitting in for Robert Davi. We are talking to David Fischer. He is the CEO of Landmark Capital. He's the guy I like to turn to whenever there is an issue and a question about the financial markets, international and in the United States. You can get a hold of David at 855-747-5947. That's 855-747-5947. His website is landmarkgold.com. Give him a call. He will tell you some of the neat things that he's talking about with us here on the show. David, it is a big week for Janet Yellen in the Washington, D.C. area. She's the chairman of the Fed, the Federal Reserve. She's going to be speaking before the Congress. What do you see happening with Janet Yellen?
Well, this is her speech before Congress talking about the monetary report, and she's released a few excerpts in the topic she's going to be talking about, which she's going to talk about interest rates on the rise. She's also going to talk about how they're going to unwind their balance sheet. And just keep in mind, on a side note, the Fed balance sheet 10 years ago was $550 billion. Now it's $5.5 trillion, so it's gone up quite a bit. They've been buying what you call treasuries. They're the number one buyer of treasuries. Now they're going to not buy the treasuries, they're going to unwind it. And then the third topic is, we call it pulling away the punch bowl from the party. She calls it, how does the economy stand on its own 2 feet without having what you call injection of capital into it. Quantitative easing is the term. They did 3 of them. So those are the topics, but she's also going to talk about, which they normally do not say this, but one of her quotes is this: valuation pressures across a range of assets and several indicators of risk. Investors' risk appetite have increased further since mid-February. She's going to talk about the market, how it's overvalued now. Obviously, I've said before, and I've wrote articles on it, the Fed creates bubble after bubble, then they create more money to fix the bubble, and that's what's happening right now. Unfortunately, the Fed has created a bubble in the market, and others are coming out and saying such. Now they're going to try and fix it in the aftermath once it lets the air out of this bubble or pops. So,
and when the bubble pops, you get a correction, the stock market goes down. What happens to the price of gold in those circumstances?
Well, here we are in 8 years, the second longest run of time in history in a market in stocks where you've had no correction. Previously, in 2008, gold went up 72% when stocks retraced 45%. That was a big correction. So historically, gold goes up when the market corrects. It's the old adage, buy low, sell high, versus buy high and hope it goes higher. That's what the stocks are doing versus that's what gold is doing.
You've talked about fund managers who are hedge funds, and these are the folks who are paid, I guess, the big bucks to be able to tell what's going to happen. And they have been talking and warning, and you have been talking and warning about the fact that we're in for a correction. It has to happen. What are the warning signs, and what have you been talking about?
Well, the person that comes and joins the party this time is Jason Karp. He runs a $3.7 billion hedge fund, a measly $3.7 billion.
Wow.
He has been done very well. The name of the fund is Tour Billions Capital. And his quote on the market, so he's calling the teapot black, if you will.
Wow.
He's saying, quote, people are just paying significantly more assets for without any fundamental improvement on those assets. In other words, the market is overvalued, he's saying, and nothing has happened to cause the market to go higher from the company reporting more earnings or they're sharing more dividends. It's just the fundamental belief that the market should go higher because we have a great president that's a business-savvy president. So that's the environment that's causing the market to go higher, not because we're passing bills like a reform and repeal Obamacare, not because we have a tax incentive for businesses, but the environment in itself. But that's going to run out of steam. It's been slowing down, unfortunately, Brian, waiting for these bills to be passed, which are just stuck in Congress. So get ready for some sort of a market correction that will happen. Once one trigger hits, then you'll see other things happening. It'll happen fairly quickly.
It is debt, and there's no way around it. The country is some $20 trillion in debt, and you have been talking about a bail-in. That's one of the ways that countries solve their problems. What is that all about?
Well, they solved their problems because they couldn't get a bailout. And so they went internal. They bailed in. 9 countries around the world did this in the last 5 years. 8 of those are European. And so we've followed in the same footsteps and set up laws called the Dodd-Frank Act and several other laws and entities like the Consumer Financial Protection Bureau. Even the FDIC is involved in this, and the Federal Reserve are all involved in the bail-in. It's all been set up. And we have a detailed report that's in its 6th edition describing how our country has already set this up. They just haven't pulled the trigger, but they've done the test runs internally in the government on bailing into government funds, and nobody raised an eyebrow over it, but they're all documented through congressional letters I cite on how much money they took from what fund, when they did it, and why.
You can get that from David Fischer at 855-747-5947 or go to landmarkgold.com. He is the CEO of Landmark Capital here on the Robert Davi Show. David, we love having you on the show. Thanks for joining us.